My name is Rick Bloodworth. This is the Common Sense Christian Financial Channel. It is Saturday, February the 28th of 2026, and I thought I'd go back and look a little bit at what happened in the market this past week, some things that were very much in the news in the market this past week, as well as what maybe we can be expecting going ahead. So I thought I would just go ahead and mention where we're at. We had been in a channel for quite some time. Matter of fact, since February the 5th, we were in a range between $70 and $90 roughly that we really didn't break out of one way or another, with the exception of just a brief moment or two in each direction. But in the last 5 days, we've started to challenge the $90 mark that had been the upper end of the level. On the 23rd of February, we had a low of $84.52, which has been the low for the entire week. And then we essentially gapped up and opened at $84.75 and went as high as $89.17. So we were starting to challenge that $90 mark this past Monday. And then on Tuesday, we got as high as $89.03 before settling a little bit lower. And then on Wednesday, we got as high as $91.36 before settling down to $89. And so this was really the first day that we broke out above the $90 level. We didn't stay there for very long. The next day we went as low as $85.94 and as high as $90.48. And then yesterday was really kind of the breakout day. This $90 peg that had been in, or $90 ceiling that had been in for so long, was not only broken through, but it was broken through with pretty good conviction, and it actually closed at $93.66. And so it broke the $90 resistance line with a certain amount of conviction. It was by more than $1 or $2. The volume was just so-so. As a matter of fact, yesterday's volume was the second lightest volume we have had in several months, but the entire last couple of weeks has been unusually low volume. And I want to talk about that in just a moment, because I think it signifies what the world is starting to look at the COMEX as. And so, but anyway, yesterday's volume, total volume for the futures on the silver market was 66,594 contracts, or about 333 million ounces of silver. Again, the second lowest amount of silver that's traded on the futures contract in the last several months. And so fairly low volume, but we had very strong price demand all the way through the day. Now, there's a couple of things that I think that probably should be mentioned, one of which has been pretty heavily in the news. There was a shutdown on the COMEX on the 25th of February. For about an hour and a half, both the gold and the silver complexes were shut down, and there was apparently some different types of goings-on during that time that really changed the complexity of the March delivery. The March delivery had been at threat of not being able to meet all the contracts that were still open that wanted to take delivery. But during that hour and a half period, somehow, during that day at least, quite a number of contracts went off the board, continued again the next day, and then yesterday, another 4,638 contracts for March delivery were unwound, leaving just 1,500, about 1,600 total contracts left on the March delivery, or about 8 million ounces that are going to now take delivery sometime in the month of March. Now, the reason this is significant, just a few days earlier, there was so much silver long on the March contract that it was starting to look like they might have trouble delivering it, because in the vaults, they only had about 86 million ounces of silver available, and the contracts exceeded that by quite some amount. Now, this is not unusual for contracts to unwind the closer to the end of the month that they get. That wasn't the problem. It was the shutting down of the market and what some of the rumors that came out of that shutting down brought. I'd heard by one gentleman that of the 36,000 March contracts that had traded that day, that 31,000 were supposedly traded during that period. One of the viewers came back and said they looked at an hour-by-hour chart on that day, and that did not appear to be the fact. So I'm not sure exactly what happened, but what we do know is that the market was shut down. It was referred to as a technical glitch. But whether it was just very fortunate on their part or whether it was engineered on their part, you can be the judge on that. But they were able to unwind a contract that looked like they were going to have trouble delivering it. And then right after that, India, which is the world's largest silver consumer, came out and said that they would no longer be using the London or the New York prices to price their silver in anymore. They indicated that they were no longer trustworthy enough to be able to do that. And so from now on, that particular silver user, India, is now going to be using the Eastern markets, Shanghai in particular. And so this is a fairly significant occurrence when what a lot of people look at as a third world nation decides that the Western nations' markets are no longer trustworthy for whatever reason, whether they believe they're rigged or they're incompetent or a combination of the two. When you start seeing nations, countries like India, say you cannot rely on the COMEX anymore, you cannot rely on the LBMA anymore to be a fair reporter of values, well, that should tell you something about the rot that is currently in the system. And maybe that would explain why the volume on the COMEX has been so low these last few weeks. It may very well be that nations around the world are starting to look at the American markets as something that are corrupt, and they don't want to be influenced by that. They don't want to have their sales influenced by a corruption or any sort of pressure that's brought to bear to artificially suppress prices. And so whatever the reason, we've got a very low volume right now, and the credibility of the COMEX as well as the London the LBMA are no longer being looked at upon by the rest of the world in the same way that they used to be. Now, today is Saturday. This morning, America, with a joint mission with Israel, bombed Iran. A lot of different things that are going on over there. You can draw your own conclusions on that. What I wanted to point out about Iran was they were one of the 11 BRICS nations, the formal BRICS nations that have signed up to be part of that trading group that was going to trade in their own currencies outside of the dollar. And of course, Iran, along with the United Arab Emirates, are very important as far as the oil portion of the BRICS. And now Iran, just like Venezuela a few weeks ago, appears to be taken out of that equation. And so whether that has anything to do with any of this or not, who knows? All we can say is that there's a lot of things that are going on around the world that are starting to disrupt the commodities markets. One last point before I leave this chart. I believe that these last 5 days have started to set at least a temporary floor of this $84.52 low for the past 5 days. And I put a $100 mark just because that's a psychological barrier going up, and we're starting to approach that. And so I personally, this is just me, I'm going to start using this as the range that I'm looking at as far as whether or not the market, whether or not the silver prices are remaining within a range, or whether they're breaking out or whether they're breaking down. The $70 level floor that had looked like it was in place is now even more strongly in place right now. And I've moved my lower part of the range now up to $84. It's very new. It's recent within the last 5 days. and this certainly might not hold. If it doesn't, I'm going to be keeping my eye on that, and the next level I'll be looking at is the $70 level. So that'll give you an idea of what I'm doing here. Again, the $100 is just a psychological range. Our all-time high is about $122 on an intraday high, but I'm going to be looking at this as far as the range right now. And so I'm just going to leave this chart up in the next few days as far as being able to tell what part of the range that appears to be newly established that we're trading in right now. So that's where we're at on that. I did want to point out just a few more things about the COMEX, and after that I'm probably not going to be talking about the COMEX a whole lot anymore, because again, the rest of the world is starting to look at the COMEX as no longer a reliable setter of values any more than the London Exchange is being looked at as a reliable setter of values. And this is changing the world. The Western world was the one that was the ones that really did kind of peg the values and tell people where they were at. The London, the LBMA's twice daily pegging of the silver price and the gold price was a big thing for a lot of years. And again, the rest of the world is starting to look at other areas, Shanghai amongst others, as being more reliable as far as figuring out a true value for certain commodities. And so it is looking like that the COMEX is not only no longer being the most trustworthy combined with the LBMA, but it looks like they're losing their influence and they're becoming something of a laughing stock. It's becoming known around the world that they play by their own rules and they make the rules up as they go along. Now, whether that's true or not, I'm just saying this is the way the rest of the world is starting to look at it, and I suspect that they have reasons for that. I do want to remind you that the COMEX is run by the Chicago Mercantile Exchange Group, the CME Group, and they run and own the Chicago Board of Change, the Chicago Mercantile Exchange, the New York Mercantile Exchange, and then the Commodity Exchange in New York, as well as owning over a quarter of the S&P 500 indices. And so they're a very powerful group, probably the most powerful group in the world right now, but they're starting to lose their legitimacy as far as being able to set a price that the rest of the world goes by. And so keep your eye on that, and keep your eye on these spreads that we're starting to see between the Western markets and the Oriental or the Eastern markets. Right now, as of today, there is currently an $11.49 spread on the spot silver price between Shanghai and the COMEX. Shanghai in US dollars is reporting a price of $105.29. My understanding is this is before the VAT tax goes into effect. And so why is that significant? Well, if the Western spot price is $93.80, that $11.49 gap is so large that it can begin to a certain type of, or a certain amount of arbitrage, people bringing in silver from the Western markets onto the Eastern markets to try and make that $11.49 profit. They're obviously going to have insurance costs, transportation costs, and other costs. But again, my understanding is this $105.29 mark that's being quoted in Shanghai is before the VAT taxes, that the VAT is the responsibility of the purchaser, not the seller. So keep that in mind. I don't know exactly how accurate that is. Larry Christensen with the CPM Group has indicated that that is not the case, but I think that probably it is, that $105 mark is before the VAT tax is added on. So somebody buying on the Eastern market would literally be paying $20 an ounce plus more for their silver than they're paying on the Western market. So you can look for that gap to close. One other thing, there were some people that were very critical of the CME coming out and suggesting that they had a technical glitch that not only shut down their metals markets, but allowed a lot of people who were in an embarrassing position, an embarrassing short position, to escape that position. When we look at the fact that last March there were 80 million ounces of silver delivered off of the COMEX, and right now on the first delivery date there was only 8 million ounces standing for delivery, 1/10 of last year. Well, there's a lot of suspicion about what's going on and a lot of suspicion as to what happened this past Wednesday. Understand the CME Group is owned by a conglomerate of very large companies, many of which are banks. Vanguard owns 10% of the CME Group. They're the largest shareholder. BlackRock owns 9%. They're the second largest shareholder. JP Morgan Asset, whatever that is, obviously an offshoot of the JP Morgan conglomerate, owns about 3%. Or 2.5% of the CME Group. And so you look at that and you look at a number of other financial institutions that own the CME Group, and you start to realize that there is an awful lot of conflicts of interest amongst those who own it, and some of the things that have occurred in the last several months that were favorable towards the banks. When one group owns something and the rules seem to get changed or suspended in their favor, you can only do that for so long before they start losing credibility. And it does appear that the COMEX has lost an incredible amount of credibility since this last January, when the market started to become untethered both in gold and in silver. And while there have been certain sell-offs during that period of time, it does look like these precious metals markets have been basing at a much higher base than they started off at. Obviously they have. And so it's starting to look like those who have had an interest in suppressing prices for a long time because they have had such large short positions no longer are going to be able to keep those prices suppressed, if in fact that's what they were doing. So I just thought I would bring some of that up today. I think it's something that you need to be aware of. Now, as far as what that means to us, the retail side of silver, if you're like me and the primary reason that you invest in silver is for an insurance policy or for a savings account, you want to have something that is set aside in a commodity that has been historically an excellent store of value that keeps the pace of inflation very nicely. I've had a number of people say, well, this keeps better pace and this keeps better. I know you can find instances where whatever asset that you like has kept pace better than silver and gold have. By all means, go with that. You seem to understand it. I'm not attacking the things that you like to invest in at all. I'm talking to people now who have chosen to invest in silver and gold, and primarily silver. If you are looking at it as an insurance against a world that's getting more and more uncertain, if you're using it to try and be a store of value against the ravages of inflation, then all this stuff that's going on right now really should not affect you. It has had an effect of dampening down the prices, and if that has allowed you and I to be able to accumulate more than we otherwise would have, then we have been pleasant, unintentional recipients of price suppression, if price suppression has occurred. And so we've been able to buy these assets on sale right now. Obviously, where we're hurt is when we need to sell them, or if we decide we would like to take some profit. And that's the other end of the market. And that end of the market is very much cloudy right now. Those who have been the best friends of the stacking community, the coin shops and the wholesalers, have recently come into disfavor with their clients because they got really hurt when the market plunged so much on January the 30th. They had been buying hand over fist and trying to service a lot of their clients over that time, some of whom were bringing in some of the junkiest silver you could possibly imagine. And then when the market plunged $45 from top to bottom in one day, well, a lot of those dealers got hurt, and now they're having to make up for it. And so their premium margins, their premium spreads are much greater than they have been in the past. My encouragement to you is, if you're just buying anyway, find the dealers, shop around and find the dealers that are offering you the best price. And when I say find the dealers offering the best price, make sure they're a legitimate dealer. I've been investigating this for quite a number of decades right now, and so over the years I've found the dealers that I believe to be the most trustworthy, that when I buy silver from them, I know when I get that silver in, it's going to be genuine. It's not going to include counterfeit. But just do your due diligence on this. If you're continuing to buy and save, by all means continue to buy and save. And if there comes a point you'd like to sell, shop around again. Find legitimate dealers who will give you the best price you can get. The commissions, these premium spreads that are so large right now will eventually close if the supply-demand picture remains what it is right now. Demand at the moment is overwhelming the supply on the commercial side, on the big exchanges. But on the retail side, the demand is dwarfed by the supply right now. So if you're buying, take advantage of that. Go ahead and get it on sale. I wouldn't borrow money to do so, and I wouldn't make my plans to get a whole lot more than I was planning on anyway. I just keep on going slow and steady at this. If you're intending on being in it for a lot of years, you've got a long time, and you're going to find out that this little period of time may have just been an anomaly, or you might also find that it was the next springboard into propelling prices into the stratosphere. And if that happens, well, just deal with the profit as best you can. That's the video for today. I just wanted to give you some things to maybe be thinking about, to look at a new range that I believe we're in, and also to realize some of the things that are going on around the world. Even though they might be inconvenient and frustrating for us right now, we can still work around. You're smart people. We can use the mind God's given to us to make the best decision that we can. And that's the final thing. Be prayerful in your decisions. If you're a Christian, try and be the best steward and help other people out with the profits that you do make, and I think you're going to find that it's still a pretty good market to be in. I appreciate your watching today. Let me know what you think about it in the comments, but I hope that we'll see you again next time. God bless.